So we can't take every single individual call, but what we can do is first get an overview of how things are going, and then start answering the questions you've already sent in over the last few days. And you can still ask questions today. Just do hashtag AskFinney and ask your question, and they'll show up on the screen right here, and I'll ask our experts. Let me introduce our experts right now. We have Rafael Tolino. He's from the IRS. He's been with us for a very long time, doing this year after year. Rafael, thanks a lot for joining us.
Thanks for having me. Glad to be here.
And then we have Norm Golden. Norm and I go back, I don't know, a couple of decades or something, Norm, with the Golden Gate Society of Enrolled Agents. Hey, Norm.
How you doing?
Quickly, tell everyone what an enrolled agent is.
Enrolled agents are federally licensed tax practitioners licensed by the U.S. Treasury to represent clients at all levels of the Internal Revenue Service, preparing tax returns and handling audits and collections.
Excellent. And then our third person here is Laura Ross. She's with the California Society of CPAs. Laura's with us year after year as well. Laura, thank you so much.
Yeah, happy to be here.
Laura, I'll let you take... Go ahead. Pardon.
Oh, my connection cut out, so I didn't hear your actual question that you were asking everyone.
Well, all I was doing was saying hello.
Okay.
So you're with us. Let me go ahead, Laura, and I'll give you the first question. I'm going to ask all three of you this question, which is, what are some of the unique challenges that the pandemic has sent your way as you're attempting to practice?
Okay, so it actually hasn't been as bad for us, I think, in the accounting profession as it might seem. Most of us had already moved to being able to work remotely for various reasons, and a lot of our information is cloud-based nowadays. So for someone like me, it's been actually fairly seamless. The issues that for me are my clients. They have issues with the way things are going, the way money is flowing, the way they're getting their information, and the way they get it to me. But for me to actually sit down and work, pretty much no change, except I no longer have a commute. But when I have a client, some clients have not really adapted as much to doing everything electronically. We do have a lot of clients that are used to sending you things on paper. That creates more of a challenge. They're trying to figure out how to get their paper documents converted to electronic documents for me. I mean, in some cases, I literally have them mailed to my house and I scan it for them, because obviously my staff is not here with me. I'll have to work with my staff electronically. So I'd say our clients have a little bit more problems, but for the accounting industry in general, many of us were already well equipped to work at home and remotely.
Norm, I'll send the question over to you. What have been some of the challenges?
Well, I kind of agree with Laura. I think that the hard part has been on the clients, especially my elderly clients who are used to coming in and have a face-to-face meeting. Now they're been mailing them in to us, but just like we're doing right now on Zoom, I have Zoom meetings with my clients so they can see me. Probably the only thing that has been a problem is trying to call financial advisors and brokerage firms. They're not as available as they normally were.
Rafael, other than the dates changing for the tax deadline quite a bit, what have you guys been dealing with?
Well, big picture and small picture. Small picture, a lot of IRS employees have and are able to telework, and that's been going on quite a bit, to be quite honest. But big picture, you're talking about IRS campuses around the country that were shut down, including Fresno, which recently reopened slowly to start processing and doing those kinds of things in terms of returns and opening mail and the such. At the same time, you had this pandemic come along, and the CARES Act that was enacted in late March, that at the end of a filing season, they had us sending out about 160 million economic impact payments, and at the same time, our workforce, abiding by the rules and guidelines in this COVID climate. So it's been quite a challenge, and certainly that's the big picture part of it. But we're doing what we can as best we can, and still asking for some patience on refund timing at the very least.
Well, let's go ahead and dive into some of these questions because we have so many. I want to get to as many as we can. The first one comes from Valerie. And she says, hi, I filed my taxes on May 1st, 2020. I received my California tax refund quickly, but still have not recovered my federal refund. What should I do? Raphael, that seems like it's for you.
Yeah.
I'm hearing this quite a bit.
Yeah, refund timing, like I say, is not the normal. The normal is, it's about 3 weeks for most, 9 out of 10 paperless return, that kind of thing. But this isn't a normal year, so there's a lot of reasons why a return would get slowed down, if you will. Might have hit a filter for something like ID theft, other kinds of things. But considering the pandemic and the limited staffing, and depending on how that return was filed, you just don't know. You apologize in a way of saying, look, we know people want their refunds as soon as we can get it to them, but still asking for some patience here, because you just don't know all the facts, and we're doing the best we can.
Do you have fewer workers this year? Does it take longer to work from home remotely?
Not necessarily longer, but you have employees that are in our campuses all over the country that generally can and do better, if you will, if they're actually in the office, and they're not. And to set up teleworking around the country for people who could use it, for example, to answer the phone lines that were shut down for quite some time, is not the easiest task to do in a short amount of time. So it's irs.gov, and then more irs.gov, as much as you can for information.
Let me give you a question. This is a little bit longer. This is from Lisa in Oakland. She says, hi, Michael. My issue is that I mailed my taxes off the last week of February 2020. I've received my state refund in April, received my stimulus check in May, but I have not received my federal refund. When I go online to where's my refund, I answer all the questions, which I've answered, except the one question which asks about the file date. I don't have a file date because I do not do my taxes online. There's no one I can call because of the pandemic virus. So I'm asking, can you help me, please? And I guess I'm asking you, Raphael. Well, I'll start with you. You're probably hearing it a lot, right? I mean,
yeah, and I just mentioned it. I mentioned again. It's just like you empathize. You ask for patience. You understand. I don't know exactly what they're entering into where's my refund, or what's coming back to them, or what kind of information is missing. Although the date, as you mentioned there, but there's a lot of security enhancements we've got there for sure. So perhaps that's part of it. But all I can do is just say, look, we're doing the best we can. Depends on the situation you're in, if it's been processed or not, hit a filter or not, or those kinds of things. But at some point, I hope that these people get their refunds as soon as they can. It's just, I don't want to give a time frame because I don't want to be held to that in this kind of abnormal kind of time. But we're working on it.
Yeah, I understand, Rafi. I'm going to hold your feet to the fire just a little bit more. I'm going to stay on this topic for just a second because okay. Janet out of San Leandro said, one time I talked to a live person and she said they were not processing taxes. Is that true, or did she get that wrong?
Well, paper returns were sent to campuses, like let's say Fresno, for example. If you sent your paper return in and we close down, it may still be there or may not get fully processed because our staff there pretty much left the building, so to speak, later on in March per the rules and guidelines of COVID-19 and are slowly coming back, as a matter of fact, last Monday. So that could very well be the case, unfortunately. So I guess that's the short answer of it.
Okay, now I have two questions here about the 401k emergency withdrawals. Laura, I'll throw the first question to you. Jerry says, according to the IRS, we are allowed to withdraw from our 401k without suffering the tax penalty of 20% and 10%. I thought it was 10%. I'll let you comment. Do you have to decide the withdrawal as income? Do you have to, declare the withdrawal as income? And what IRS form do you need to get that done? Laura?
Okay, so I would have to actually look up the IRS form, and I can do that during one of the other questions if we want to go back to it. But yeah, they will eliminate the 10% penalty if they have the emergency withdrawal. But I believe one of the conditions is they also have to pay it back at some point if they don't want to be taxed on it. And there is, I believe, a methodology where you could also pay it back if you just need a temporary loan, but you can avoid the penalty. So there's a lot of nuances depending on how you do it and when you pay it back. And I can't remember the time frame, but there is a time frame to pay it back in if you'd like to just use it as a temporary cushion for your income. So, but yeah, that there are some definite nuances to that, but it is a possibility for someone who needs the cash now and has the ability to take it out of their 401k. I also believe not all 401ks participate in this, so you have to check with your employer and see if their plan will allow you to do the emergency withdrawal.
Okay, let me go over to Norm then. Norm Golden, Golden Gate Society of Enrolled Agents. We're still talking about the emergency withdrawals. This is coming from Linda in San Jose. She says, if I take a COVID-19 emergency distribution of my 401k, how do I pay taxes on it over 3 years instead of 1 year? I think that's what Laura was just referring to. Is there a special form to fill out? Do I receive a 1099 from the financial company? She goes on and on. I don't want to get too much into minor details here, but do you understand the question she's asking, Norm?
Yeah.
How does she pay it back, I think?
Well, I think there's going to be a provision on the revised Form 5329 where you're going to make that election.
And so you either keep the money and pay taxes on it, or you can take the money and pay it back over 3 years. Is that the deal?
That's what we understand. Yes.
Yeah, it gives you that option. The 3 years to pay it back. So you take a distribution out, you can take it and pay it back over 3 years. You can repay it over 3 years. It's actually quite taxpayer friendly, to be quite honest. We've put out a couple of news releases on that recently because we issued official guidance in 2 notices earlier in June. And if you want to go to irs.gov and look at that information, it's pretty comprehensive, and it does explain all the rules and flexibility. One of the things you want to be careful of, and it's a pretty broad brush, is that you have to be pulling these distributions out early from an IRA or a 401k based on your adverse consequences, if you will, if that's the right way to describe it, from COVID-19. So if you have been, let's say your job was eliminated, childcare, all these different things that have affected you, and it's a pretty broad brush, that's when you're able to do that and avoid that 10% penalty if you are under age 59 and a half. So,
as a consumer advocate, I really feel the necessity to jump in here to say this is a great opportunity for someone who's really up against the wall, but I want you to be very, very careful. At some point, you're going to retire and you're going to wish you had that money. So don't take it out casually, and do try to pay it back over the next 3 years. I know it's a very, very tough time. It's very easy to say what I'm saying, and a lot harder to live it, but really, really think deeply before you take any money out, and think about how you're going to get that money back in.
And
Joan, pardon me, go ahead.
I was just going to say, we're really in an unknown territory. In normal years, the tax forms for the year don't come out. The drafts aren't going to be released for months. So really what we're talking about is reporting this on a 2020 tax return. And we haven't even seen the forms yet. So many of them are going to be revised.
Wow.
And you were right. If you took out the amount, it is paid. You can pay it back. You can pay the tax over 3 years, which is nice. You can spread it out.
But okay. Joan in Brentwood asks, our check for taxes due was mailed on March 25th. It has not been cashed. Should we resend the money? Laura, you were reacting big. Go ahead.
As Raphael was saying, the IRS campuses have been closed. Anything that was in an envelope is going to be extremely delayed in opening in some cases. We've been asked as CPAs also, if we've sent in a form and had no response, please don't send another one, because we're going to increase their backload. Sending a check into the IRS, if you mailed a paper check, there's a chance that it just is taking a while for them to get that open, and you should not be sending another paper check.
Yeah, Raphael, I'll let you chime in.
I was going to say, it's a really good question. We were just discussing this on a conference call last week about checks that may be 90 days out or whatever, and what to do. I don't know if we have any official guidance yet, but as Laura says, in terms of sending a check, I'm not so sure about sending a second one. It's probably not the best idea, but I know what isn't a good idea, and that's sending in a second tax return. try to avoid sending in another return because that's really going to gum it up. If you had your return in paper and it's sitting there, try to avoid e-filing because that really will slow things down. And I thought I would just get a chance to throw that in there because it's really important as we are in a spot where we haven't been before.
Raphael, I think about how much I dislike all of this paperwork. Someone's willing to do it twice?
Well, let's just say, for example, you filed by paper, you've lost all your patients, nothing has been done in the last 3.5 months, and you say, okay, well, I'm going to go online and file electronically, that kind of thing. Because electronically is the way to go. If you do a paperless return, direct deposit, e-file the whole thing, whether you're doing it or one of these wonderful people on Miss Ross or Mr. Golden are doing it for you, it's the way to go in terms of speed and convenience as opposed to a paper return. And therefore, you might consider that as an option, but it really shouldn't be done.
Okay, let's give Norm Golden this next one here. It's kind of complex. Last year, I claimed and received the sale of an unclaimed property from the state. That's where you've lost track of the money, or the company did, and all of a sudden it shows back up. Why? I do know it was for a stock sale and some dividends associated with the same stock. The state did not issue me a receipt. Now, I have Googled the issue, but I do not know how to report this on my tax return. I know the sale price. I'm not sure it is a long-term sale, but I do know the cost basis. Is that enough information to move forward?
Well, there's one last question. Lots of times people will report the sales, but we're talking about the proceeds that the state was holding on to. So was the sale reported in a prior year? If the sale was reported in a prior year, then there's nothing to report at this time. But if the sale wasn't reported in a prior year, then I would report it in the year received.
So this is from David in San Francisco. So David needs to, because generally when this all goes to the state sells and hangs on to cash.
Right.
And so it would matter when it got sold, not when he received it?
Correct.
Wow. Okay. Well, that's complex. He's got to get together with a tax professional on that one.
That would be a good idea.
Yeah. And here's another one. I believe this came from Michael. I recently installed solar and qualified for a 26% federal tax credit off of the total cost. Now, I also qualified for a self-generating incentive program, SGIP. I've heard about that rebate. Is the tax credit based on the total cost or the cost less that tax rebate? Laura Ross, you understand what he's saying?
I think I understand what he's saying, and I need to know if Norman's seen that. I have not had a client actually install solar panels. You seen that, Norman?
So are you talking about the total amount that he paid minus the credit?
Well, that's what he wants to know. Can he write off the total cost and ignore that credit, or does he have to subtract the credit and then get his 26% federal tax credit?
Well,
when he said write-off, is this part of a business?
Yeah, that's my question. Is he using?
I don't think so. Isn't this, Raphael, isn't this for the solar you put on your home, or do I have this wrong?
No, that could be right. And off the top, I'm thinking perhaps to avoid double dipping, so to speak, I'm assuming he might have to subtract that credit before he gets the federal credit, but I'm not sure. I would definitely research that first, to be honest. But I'm assuming, for the home energy credit, that is available. It was reduced this year, I think, from 30% to 26%, if I remember it right.
That's
correct. I'm not so sure. There was a reduction in 2020.
Well, Michael, I applaud your idea to try to get the tax break on the entire money and then get the rebate. I'm not sure that's going to work out. We can't answer that question right this second. It's so complex, but good question to ask. Be careful with that, because it looks like double dipping to me. But sometimes they've missed something and you've caught it.
As I say, Michael, the IRS website is full of that information, though. If he wants to research that,
that'll be there, huh?
Yeah, IRS. You can find lots of information about. There's a form and the instructions for that. It's worth researching if he has the gumption to get there, or contact a tax pro, of course. Either one.
Right, IRS.gov. There you go. Kathleen, I'll throw this one to you too, Raphael. Kathleen wants to know, did the extension dates move also? So filing date moved to July 15th. Do the extension dates go past that then?
Short answer is no. It's still October 15th. So you get 3 months from now, as opposed to saying this normally in April where it's 6. So that's the short answer. And it's
so
easy
you're
to
still
get
in
it.
October.
Obviously. What's that? Yeah, still October. And then the enhancement here is it's easy to get an extension either through your software or through the quarter page form 4868. But whatever it takes, give yourself that extra time if you need it.
Let me ask Norm and Laura, have you heard from your clients about this? Do they need fewer extensions this year because they got one automatically?
No, they're go ahead, Laura.
I mean, there are a few that are slipping under the wire, but the clients that need extensions often file much later in July and August because they're waiting for information from other entities. So it that hasn't impacted them that much. What's happening is the clients who normally would file by April 15th are filing by July 15th.
Yeah, okay. Same with you then, Norm?
The usual suspects are the usual suspects. So it's pretty much the same.
Okay. Let me see. Okay, we've done that one. Let's go to the ones that are coming in right now. This first one, I think there's a lot of confusion here. So I'll let all of you try to sort this out, which is, let me see. It is Alan, and he writes, I have a 401k from an old job worth $10,000. I'd like to take that money and invest it in the stock market. Are there any tax implications in doing this? I was advised to put it in a Roth where there is no tax. Is that correct? That's not quite the deal. I'll start with you, Norm.
Okay, well, first of all, if he's getting the money now and he wants to avoid tax, he can always roll it over into an IRA. If he hasn't received it yet, but he's going to do it, I strongly recommend what's called a trustee-to-trustee transfer, because if he takes the distribution, they're going to withhold 20% for federal income tax.
Yikes.
He can take the money now, and if he wants to invest in the stock market, he's going to pay the tax now in 2020 and do it that way. If he wants to put the money into a Roth IRA, he can do that. While the money's in the Roth, that's going to earn tax-free, but he's going to pay tax on this $10,000 distribution, and then he can roll it into a Roth. So he'll pay the tax, but once it's in the Roth, then it'll continue to earn tax-free. And is it a good idea? It really depends on his total tax situation, if it's going to make sense.
So it's like you want to pay taxes now because you believe it's going to be cheaper to pay the taxes now than pay them later. Isn't that kind of what it comes down to, Laura?
Yeah, could be.
Yeah.
There's a theory running around that because of COVID, the market is somewhat depressed right now, and that you really are at an opportune moment for appreciation if you do that rollover. So it's making the Roths look really attractive to some people right now to do that rollover, pay the tax now, because if it appreciates in your IRA, it will be taxable in the future, but if it appreciates in your Roth, it won't. So if you have stocks that you think are really likely to appreciate, it would be a really good deal, but I don't think any of us feel confident trying to say what's going to happen to stocks in the near future or in the long term right now.
Well, that's kind of guessing. Here's one that just came in from Jennifer. She says her situation is complicated, but she'll try to boil it down. Schwab cut a check for her RMD from the IRA. RMD stands for, it's the distribution you have to take. What does RMD stand for?
Required minimum distribution.
That's right. And that's after you retire, you get your 401k, and you've got to take a minimum amount starting at age 72 now, correct?
In 2020, yes.
70 and a half, yeah.
Yeah, okay. So Schwab cut a check for my RMD, but it's from the IRA she inherited from her mother, who passed away at age 74. The check was generated in December 2019. Excuse me. The check was generated on December 2018, but it sat on a pile of mail on the kitchen table. She says, I told you it was a long story. And I didn't cash it until mid-2019. So should the income have been reported on her 2018 taxes, or should it be reported on the 2019 taxes?
Well, I'm going to say it should go on the 2018 return. Taxpayers are what we call cash basis, meaning you report the income in the year you receive it. And so since she did receive it, although it was sitting on her table for a while, she did receive it in 2018, and that's where it's going to go.
I agree.
Yeah, anything else on there? Okay. Okay. Here's another one. This we're getting complex here. This is Linda from Cotati. She says that she worked a short while for an individual in New York City. She received one check. Angry that I resigned, he withheld the last check and payment. New York Labor Board secured her pay. It got to me. However, no W-2, no statement, or 1099. Don't know if taxes were withheld or not. He and his accountant both refused her request for information. How can I report this? Not understood to be self-employed or a contractor. It seems forms still need documentation I don't have. What do I do? Basically, she's got money and she doesn't know how to prove where it came from, right?
There's a substitute for W-2 form. It's 4852. You can always use that. We don't recommend you use your last pay stub, so to speak, but we used to say line 21 on the 1040 was a catch-all. I suppose if you just declare it on there somewhere, she should be okay, but 4852 is a form that could be an option here for her. That's my off the top thought on it, at least.
Is that what you two would suggest as well?
I agree, but yeah, I would use the last pay stub to get the information to put on the 4852.
Yeah.
Jose says this year he owes the IRS $786. He got confused on how he was to pay the IRS. He said he inadvertently ended up sending IRS 2 check payments of the same amount. It's exactly what we were talking about earlier, you guys. This was in March before the original deadline. Now, I've been calling the IRS since March, but no one in IRS has been there to answer my call. How can I get my money back? Will IRS catch the error and return my money? Raphael, this is exactly what you were talking about. Don't send money twice.
Well, I was saying don't file a return twice. Now, in terms of that, I don't know. Maybe you go to your bank and cancel the check. And see if the checks have been cashed at all. If they haven't been, you can maybe just cancel one and do it that way. But yeah, I don't tell you. I wish there was a way to say, God, you should contact the IRS and we'll help you out, which is a normal thing to say. And we do have limited phones, by the way. But in this case, perhaps you go to your bank, maybe find out the status that way first before you contact the agency, because you don't have to pay no more, pay no less. That's always been the bottom line.
Well, and the IRS still gets the money that they're owed, so they're not going to be upset. They're going to
at some point we'll kick you back a refund check that you've overpaid. It just might take a long time at this point.
Right. It's just a different world, Jose. I mean, that's the bottom line. It's sad but true. Brad, for a live-in personal caregiver working for disabled clients, federal tax is exempt. Is that true? I've never heard that. Anyway, the live-in self-certification form for IRS federal tax wages exclusion, I guess it's form SOC 2298, was mailed in. Do I still need to file federal taxes? And if so, what do I need to do to remain tax exempt? I don't know if the live-in exemption is included in online tax filing websites. Is there such a thing as if where you work excludes you from having to pay federal taxes? I've never heard of that.
I'm not aware. So I'll defer to Mr. Golden and Ms. Ross.
Okay. How about you two? You ever heard of this?
I have heard of that once, and strangely enough, it was on one of your hotlines. One of those caregivers called.
Right. Yeah, we get all the questions.
Yeah, it's obviously not a very common thing. And when you have an uncommon tax situation, the online sites aren't going to be very helpful, because you usually need a special form or special instructions to deal with. If he's got a document that indicates, tax issues on it, something, he doesn't have a W-2, he hasn't done a document, he may need to go online and research a little bit as to what filing, if there's a form associated with it, or if it needs to be shown on the tax return. But those are so unusual that even we would have to look them up when we see them.
Right. Norm, do you need to add anything, or she got it covered?
Pretty much. I haven't had any experience with that, so I'd like to know who paid him, first of all.
But pardon?
I said I'd like to know who paid him.
Yeah. That's very interesting. If you're still out there, give us send another note in, and we'll move this forward a little bit anyway. George asks if there's a tool he can use to calculate how much additional interest he needs to pay on an owed tax. For instance, he says, if I pay my tax a month late, I need to pay the tax plus X amount of interest. Thanks, and he really appreciates the service you guys are providing. Is there a online calculator for something like that? A month, 2 months, whatever?
No, on IRS.gov, nothing I'm aware of. I mean, if you owe, and well, this isn't really his question, but if you owe and you have a balance due and you don't file, that penalty is much greater than filing and not full paying. The interest rates are hovering around 3% or something like that, if I remember off the top.
A month or annually? A month?
Yeah,
wow. Annually, per annum.
Oh, annually.
Yeah, exactly. But geez, I'm not aware off the top based on that in terms of having a calculator for penalties by month.
There is a lot of tax software that will calculate it for you, so it depends on what tax software he's using. But I imagine some of the lower end packages wouldn't do that, but some of the software will actually do the calculation for you. But if you can't figure it out, the IRS is going to send you a bill for the interest due.
Oh, there you go. So you can let them do the math if you want to.
Yeah, you can let them do the math because it is a hard calculation.
No, by the way, you have every right to appeal anything. Don't be, just because the IRS, and if you have a right and you have the substantiation to back it up, you have every right to say, wait a second, I don't know this much. That's your right as well. Just because the IRS sends you something, you can agree with it, but if you can prove your point, you have every right to do that.
Yeah.
And let me say to George, let me underline what Raphael just said, that it's really important that you get the paperwork in. Don't let that pause you even for a day on this, because you want to get that in. You can deal with paying later as long as they have the paperwork. You're going to stay away from fines and some legal difficulties, if I'm not mistaken, correct?
Yeah, the failure to file penalty is 5% per month, whereas the failure to pay the tax is only 0.5% per month. So I agree, it's very important to file the return. And there are payment plans if you need help to pay the tax off over a period of time.
I've got Maureen from Pittsburgh, and she says she hasn't filed her taxes since 2015. She says she has had no need to, but things have changed. Social Security payments have $8,680. Also received money from an annuity of $4,658. I do not know which forms I need or how to get them. I do not have a printer. She may not have to file at that level, would she?
Yeah, what was her annuity?
Annuity was $4,658 annually, so under $5,000. And then her Social Security was about $8,700.
So all she
I
has
don't think
is
she has
the
a filing
annuity.
requirement.
All she has is the annuity and Social Security.
That's the only thing she's telling me right here.
Yeah, I agree. She doesn't have a filing requirement.
So you do not have to file. And but is that right?
Yeah.
Raphael, is everybody?
I mean, if you don't, like he's saying, if you don't have to meet a certain threshold, then no. Normally, there's a formula for that. I'm not going to get into that, but normally, if Social Security is your only income, and then maybe you have just a little bit of on the side, chances are you don't have to file. That's my general off the top offer on it. So.
We have about 10 more minutes to go. We're still going through all of the questions. So if you have a question, you haven't heard yours asked yet, go ahead and put it in, and let's see if we're going to get to it. I'm getting, just so that you know, Raphael, I know you hear it all the time, but a lot of people saying I mailed it in, haven't got it back. For those who were not here when we started, the reason they haven't heard from the IRS is nobody's at work, or fewer people are at work, right?
Well, a paper return may be caught up in processing because of the delay and the COVID climate we've been in. Yeah, and we're slowly reopening. So we had, the phone lines were shut down for a long time. They're slowly coming back, but this is not a normal thing. So we're operating wherever we can with some different things going on this year, but still asking for some patience there, and just telling people e-file direct deposit. We're moving as fast as we can.
James is apparently thinking he's doing his math before he gets married. He says, for couples considering getting married, filing taxes jointly, can you explain the pros and cons, especially considering one of them is a medical school with loads of loans, zero income, and health insurance via Medicaid? Anybody want to dive in on this? What do you need to think about before you get married? Well, somebody's working, the other one's going to school.
Well, if they're in California, if they get married, you're jointly and severally liable for all the taxes. Also, your tax filing status is determined by your marital status on the last day of the year. So you can get married very late in the year, but if you're married, then you're going to be filing a married return, either married filing joint or married filing separate. The amount of income that you earn prior to marriage is going to be your separate property. The amount that you earned while you were married, unless you had a prenuptial or postnuptial agreement, is going to be community property, and that's going to go on the return. But the changes in the tax law has greatly favored the taxpayers now for married filing joint. There was what we call the marriage penalty, but it really only affected taxpayers in higher brackets. So for the most part, unless you have a good reason not to file a joint return, most married couples are going to file a joint return.
True. Married filing separate can be a little more, what's the word, penal than filing a joint return in terms of all the benefits that go on a tax return. So you might run the numbers both ways, but generally joint's better, as he says. Yeah.
Yeah. If he has some deductions and has no income, he won't be able to take advantage of them. Now, with the new standard deduction, they're probably not in that kind of situation.
Right.
But yeah, nowadays, married filing together is usually the way to go.
Yeah. So basically, the big taxer was on being married is gone. It just isn't there anymore. It's certainly not the way it was 20 years ago when people would go, boy, I get married, all of a sudden I'm going to pay a lot more in taxes. That doesn't happen. Okay, listen up here, because this one gets a little complicated. I'm going to try to cut through it. This is from Natalie, and it's about a refund. She says California state tax refund check, so this is California, issued in her mother's name instead of her daughter's name. How does she get the check reissued in her name? Is there a way to do that?
I don't understand.
Contact the Franchise Tax Board?
Yeah. I don't know why it was issued in the wrong name.
Yeah.
There's got to be a reason.
No, let's see. Oh, it gets complex. So I'll pass it by. Yeah, she called the Franchise Tax Board. They said that she needed to call the department that handles deceased accounts. Okay, well, you're just going to have to follow through the whole system is what it's going to be. She said she filed taxes for her mother using 1310. The state, it gets very complex. You're just going to have to follow through the system. It's not going to be a quick way to go through it, I'm telling you. And right now, there's barely a system in place because we're in the middle of this pandemic. So it's going to take a while. It's not going to be instant money, if I had to guess.
Right.
Last year, let me see, Benny, I believe it is, donated over $6,000 in clothes to a shelter. What's the best way to claim this donation on my taxes? They said that they had to downsize. Some clothes are less than 2 years old. Some have the price tags on them. I've got to tell you, people tend to overvalue the items they give away. I would be very, very careful. let's start with Raphael and then move through everyone. Do you agree with me? Be very careful with that. $6,000.
If you're gonna value non-cash items, you want to basically use a rule that what would a reasonable person, what would two reasonable people exchange items for? In other words, maybe if you thrift store value or something like that, that kind of thing. The other thing is it goes on a Schedule A, and if that amount, there's going to be, if it's more than $5,000, I believe the form is 8283. I could be wrong, but there's a form there, and you want to make sure you follow those rules as well. But the key is itemizing on a Schedule A. And with the new rules, as I just learned about maybe 3 or 4 weeks ago, looking at some of the data, it is a lot more people that aren't using a Schedule A anymore because of the new rules. So if you're looking for a benefit for charitable contributions on a tax return, you want to be itemizing on a Schedule A for that legitimate deduction.
You two want to kick in on that? You must have people constantly thinking that what they have is worth a ton of money and you're not so sure.
The thing about a donation that size is they need paperwork to go with it to justify the value. So when you're donating to a thrift shop, you're generally limited to, I believe, $250 value, or actually just getting a receipt. But when you have that much, you're going to need possibly valuation, or I mean, there's a lot more involved with donation of that size. That's an audit waiting to happen, in my opinion. If it actually goes in on a Schedule A with $6,000, you'd have to have the accompanying paperwork.
Yeah,
I agree with you, Michael. You got to be very cautious. If you donate more than $500 in the entire year to any number of charities, you have to attach the 8283 to your tax return, and the totals are going to go from that form onto the Schedule A. And I agree with Raphael. You're going to use what's called the thrift shop values. Even if you had a brand new shirt that you donated, it's still going to be considered used. And it is what's the market going to bear? It doesn't matter how much you paid for it. It's what really, if you go to Goodwill or Salvation Army, what is it going to sell for there? So there are websites, and a lot of the charities do have them that'll give you a guide as to what values you can use for used clothing. But the main thing is itemize everything, make it detailed as possible to support all the entries that you're putting on that 8283, because I agree with Laura, it could be an audit ready to happen.
I think we answered this question before, but they have, let me see, Megan has a family member stuck overseas, and Megan wants to know, is the extension automatic until October of this year?
If she's overseas?
Yeah, they can file, what?
Those returns were due on June 15th, I think that was also, if I remember it right, to July 15th, but that extension's available for them as well. Now, if you're overseas and you're serving as a military member in a combat zone, that's a whole different thing altogether. But if you're an international taxpayer, well, those rules can be a little more complex. I definitely would look into things just to be sure. But that's what I'm thinking off the top. There is, once again, I'm going to refer to our website. There's lots of information about deadlines and such, and I believe there's a publication, which I can't think of the number, but you can get that information about deadlines and such on irs.gov, to be sure.
Have you guys run into this? I mean, the Bay Area travels a lot. You must have clients that are overseas or part of the time anyway.
Well, if you're overseas, it's not just because you're traveling. If they were residing, in a foreign country, then I agree with Raphael. Their due date was June 15th, but I believe those were also extended to July 15th, and then they can get another extension.
Okay.
Yeah.
Well, we're running out of time here, so I'm trying to look at a couple of quick ones maybe we can get out. Here's one. Rachel wants to know, does she have to claim spousal support?
Well, it depends. When was her divorce finalized?
She doesn't say that. Give me the cutoff date then.
Well, the Tax Cut and Jobs Act of changed it so that if she got divorced years ago, then the answer is yes, she has to report it. If she got divorced this year or 2019, and actually it's
28.
yeah, then the answer is going to be no.
Now, you guys
We
are
really
right.
need to
That
know
changed.
when the final decree was.
That changed. And it's not deductible either, alimony as well, nor do you have to claim it. That did change. I believe you're right. I believe it's after December of 18, if I remember it right off the top.
Correct.
Is all that information on irs.gov?
Oh, yeah. Yeah. We used to have a big page dedicated to the Tax Cuts and Jobs Act because that was a huge reform of taxes, if you will. And then along came COVID-19, and the other things became more important, including the CARES Act, which is the legislation that supports all of the tax relief. But yeah, the IRS website, like I say, is really a nice beacon, if you will, of information. Easy to read for the most part, unless you want to read code sections, but it's all there.
And it is amazingly well set up. Raphael, you and I have talked about this a lot. I'm a big fan. You guys have been out in front of this from the very beginning. You guys have done a wonderful job. Look, we're at the 6 o'clock hour, so I'm supposed to wrap it up here. It's supposed to probably finish before I did, but I want to give each of you kind of a final word. I'll start with you, Raphael Tolino from the IRS. Any final thoughts?
Yeah, under no circumstances the IRS sending you an email out of the blue, uninitiated, no random calls asking you or telling you you have to reapply for your economic impact payment or your refund, or there's a survey or a probe, or click on this link because you have to do this, that, and the other. Our normal correspondence is letters in the mail, and not random threatening phone calls or emails and the such. Those are scammers. You can looking to use the IRS as a lure, if you will. So just keep your antenna up. And if you have any questions, I'll be redundant. IRS.gov.
Well, people are tuning in and out, so it's not really redundant. Norm Golden from the Golden Gate Society of Enrolled Agents. You have any final words?
Document everything that you're going to be doing. When you're planning on doing something during the year, keep all of your receipts, all your paperwork, so you'll have everything ready. And do file your returns on time. Again, if you can't file, if you can't pay your taxes, file the return anyway. The IRS Franchise Tax Board will reach out to you and say, hey, you didn't send your payment, but there are payment plans that you can have, but the penalties for not filing are very severe.
Laura Ross, California Society of CPAs, Certified Public Accountants. What are your parting thoughts?
Patience. Everything is taking longer this year. The stuff that we've sent to the IRS is taking long to process. We're all expecting that. And, you know, people sometimes have to realize there isn't a person at the other end personally waiting for their return. It's all coming in a big pile and they're going to be processed. Envelopes take a long time to open. Everyone needs to consider switching to e-file if they haven't yet. It's the paper returns take much longer to process, much longer to deal with, take much more personnel to deal with. E-file is actually pretty simple, and it gives you concrete records of when the return was accepted. It's really a great device, but there are some people who are still resistant to moving into e-file. And then if you do mail everything on paper, make copies of everything, okay? And get a receipt.
Hallelujah.
The day you mailed it.
I really want to thank you three for dropping by. You clearly answered a wide variety of questions. You know what's interesting about taxes? It really does take in all parts of our life. You three clearly know that more than all of us. I really appreciate your time. And for those who've been watching this, I hope we helped you out some. I wish we could still have our hours-long phone bank. That's just not possible now. And that's part of what it is we're talking about here. You're just going to have to be patient. No one is trying to do you wrong. It's just where we're sitting today. Thanks a lot for you three joining us. And thank you everyone else for joining us. And
Thanks, Michael.
goodbye.
Take care.
Thank you.
Well, I'll assume we're